Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. So grateful that you're here with me today. We got a lot to cover today. Obviously, with the market selling off pretty hard on Friday, the strike shortened Friday, the holiday shortened Friday. In today's video, we're going to discuss whether or not it's the right time to buy the dip. We're going to talk about how to properly buy the dip in what is now called a mini stock market crash. And we're going to do a little bit of a deeper dive into which stocks I'm going to be looking at. There is one sector in particular that I'm going to be watching today that showed interesting relative strength despite the way the market sold off over the weekend. And I'm going to give you those four stocks that I'm going to keep an eye on heading into this week and how we need to read the tape. We're actually going to talk about the difference this week about reading the order flow and reading the tape, and how we're going to set up on Monday how we plan to trade the rest of the week, which is a really big part of trading, knowing what you plan to do well before you need to do it. So stick around. Be back in just 1 second. We got a lot to cover today. Okay, so obviously everything we discuss here is for educational purposes. It's up to you to make the final decision. It's up to me. It's our mission to help you make better decisions. So first I want to say, I hope everybody here in the States had an amazing, amazing Thanksgiving. I actually got a chance to fly home, surprise my parents, and it was a complete surprise. And just a really, really fun time. We're going to jump right into it. I just want to point out, obviously, today is Cyber Monday. So in the spirit of Cyber Monday, we are actually extending our bootcamp opportunity, the Black Friday sale, into today. So if you want to learn about that, click the link below. You'll see a Black Friday, Cyber Monday link in the description. If you want to learn about it, just click over it. Everything you can learn in there. And also, I want to thank everybody who did become a member of the bootcamp this weekend. I promise I am going to blow you away with how hard I plan to work for you. I'm going to pay you back by showing faith and signing up for the bootcamp this week. So you're going to have an amazing December. That's a big thing I want to talk about, is actually setting goals for the next year and being prepared for it. To spend December getting ready for a big 2022, kind of a no-brainer for me. So whether you're in the bootcamp or whether you're going to be here on social media with me, that's going to be a big part of December. I know we still have 2 trading days here left in November, but let's work hard as a community getting ready for next year. Don't set the resolution on January 1st. Let's start doing it now so we can start to have a big year early. So what's going on with the market? Obviously, the market just absolutely collapsed. And the variant, that's the big thing. Let's actually go over here and take a look at what's going on. Stock futures are rising. Bitcoin is rallying. Oil is rising. But this is really the big thing here, the variant and the question about how bad the variant is. So obviously with the market and the way we sold off on Friday, if you're a regular member of these calls, you know that we are drawing that box in the SPY, and that box was going to tell us whether or not it was the right price, or do we confirm and go to the upside and have new all-time highs, which we actually did. We burst through the new all-time highs on Monday, but we couldn't hold the bid. Remember that terminology that we want to talk about, holding the bid. Holding the bid means it pushes up and pauses, and during that pause, more smart money is coming in and holding it there. So remember, the big quote that we talk about all the time is we make money during the push, we manage risk during the pause. So if a stock pushes up and can't hold the bid, we have to take a step back. And then the main question is, what exactly does that mean? It means that you need to manage your position size differently. It means that you really need to dig in and find some other opportunity where they are holding the bid, or at least where you see signs of smart money order flow getting in there day after day and hopefully week after week, which is where you start to gain that conviction in your trading ideas. So the question now is, do you buy the dip in the stock market? How do you buy the dip in the stock market? And more importantly, which stocks meet the criteria to buy the dip in the stock market? So the big thing we want to outline, and I'm going to use last week in the SPY as an example, because I want to give you a mental framework of Monday's opening up. We're getting back into a full week of trading. We're ending November, heading into December. How do we watch the week starting right now? 2 hours before the market opens, getting prepped right now. The market opens, you know exactly what needs to happen in order for you to accept risk on an idea. And it really comes down to this. We're going to separate order flow from tape reading this week, because big news story, everything is kind of thrown into chaos. And now the charts are kind of thrown out of whack. They're really not in sync anymore because one big news story just wiped out 3 weeks worth of buying and pushed us down. So now we need a shorter term tape reading number. We need the line in the sand. We need the one price that matters. And you probably know it already is. It's watching the opening price from Monday. So now we're going to shift over to the weekly charts here. And I really want you to understand what this means. And if we're looking at the SPY here and we're looking at last week's price, that's the opening price from last Monday. Let me actually make this a little bit bigger. So that is what we're looking for today, because we're going to open up so much further down. And the bigger picture was kind of messed up based on the big push down after the variant was exposed and destroyed the market, for lack of a better way of putting it, on Friday. We pushed down and didn't recover. So now today we are more leaning on shorter term price action, which means we need to use our tape reading skills. And the 3 levels that we need to pay attention to are Monday's opening price, the opening price as the week unfolds each day. So in other words, Monday's opening price, then Tuesday's opening price in relation to Monday's opening price. So if you can think about it, we talk a lot about the stock market power pyramid. Now we're going to stack the order flow in just a little bit of a different way. Instead of going across the bottom and then working our way up from the market to sectors to industries to stocks, today we're going to go stock specific and industry specific from one day to the next to see if the market holds the bid. So what you can see here, let me actually make this a little bit easier to read. What you can see here is that is last week's price action. So the candle is red because it opened up there and closed down there. So what we're looking for this week is wherever the market opens today, which looks like it's going to open up around 462 and change. So right around there is where it's going to open, somewhere right there. So what we're looking for right now is, let's just assume that that's the price that the market, the SPY specifically, opens up, or whatever stock you happen to be watching. But obviously you want to stack some of that pyramid in there. So buying the dip today, buying stocks on the dip today needs to be put in context so that you don't get ran over by follow-up selling. This right now is no different from what we look at with longer term order flow and stocks having these big moves to the downside. And we saw last week a lot of the pandemic stocks, quite frankly, catch a little bit of a bid. But now we need to see, can Wayfair, I'll give you a little bit of a list here. Can Wayfair, Peloton, Etsy, these are really the 3, and probably Zoom. These are what you might call the pandemic stocks, the stay in the house stocks that were on fire last year, that are now fighting when they go from one earnings to the next. They're fighting the pandemic numbers, because usually we'll look at quarter by quarter or year over year. And year over year, they're going to have a really, really tough time beating those numbers. But can we take advantage of those 4 stocks just based on the fact that the reason the market sold off is the same reason that these stocks exploded last year? So now what do we need to pay attention to? If we're looking at Zoom, Wayfair, Etsy, and Peloton, we need to be paying attention to exactly what I just said, which is the opening price. So right now, Zoom is actually opening lower. It's down $3.78, still 2 hours before the market opens. We need to pay attention to these stocks and note the opening print for Monday. So here's the big thing that I want to get across to you right now. Again, 2 hours before the market opens. Focus more on the weekly charts this week and the weekly individual candlesticks, because the bigger picture in the market right now is a lot less clear. So that means that we need to dial it down a little bit and just pay attention to what's going on now to see if they hold the bid. So again, I just gave you those 4 stocks. Those aren't the 4 stocks that I was talking about before, but I'm giving you 4 extras. Note those stocks, even though they're in bearish longer-term order flow, do they see a couple of weeks of buying pressure for the same reason that the market is seeing selling pressure? It's very similar to, if you've been trading for a while, you know that there's a very common play where oil versus airlines. So oil goes down, airlines go up, kind of doing the same exact thing right now. Unfortunately, because of what's going on in the big picture with the new variant and these stocks potentially catching a bid. Now, we're not talking about longer-term investing here in those 4 stocks. We're talking about, do they catch a bid over the next 5 to 10 days? And if they do, make sure that you're paying attention to today's opening price. Now, as the week unfolds, then we're looking for the week to go well bid. And if you don't know what well bid means, that means that we're looking here. We want to see higher highs, higher lows, and closing near the high for this week, the week of November 29th, and then next week. If we see that, these stocks can then drop down to lower time frames, which in this case would be the daily chart, and read the time frames on the daily chart for entries and exits. So that's one strategy, buying the dip heading into this week. Now you need to pay attention to if the market catches a bid. And let's go back into the SPY for a second. If the market opens lower and catches a bid and doesn't stay there, in other words, let's say good news comes out. So now we're scripting out what has to happen during the week. I shouldn't say what has to happen. What we are planning to pay attention to, probably a better way to word it. So if the market opens lower and rallies and stays above Monday, then that's not good for those four stocks that we just talked about, because the whole reason we're looking for them to bounce is if the variant continues to be in play and the market rolls over and those stay-at-home stocks stay higher. So again, Wayfair, Etsy, Zoom, and Peloton, those would be the four that I've been looking at. Somebody else just mentioned Clorox as well. But here's the thing. I want to work our way over into something that I noticed that was pretty darn interesting in getting back into the swing of things, and that was here. So as we just mentioned before about oil, the reading between the lines and diving a little bit deeper into understanding how to read the tape, you'll notice what's the biggest thing that stands out here in the XLE. Now, we don't spend a lot of time here on these calls talking about sector rotation and diving a little bit deeper, but I'm going to do that today because it was interesting. The market took a hit last week, and the XLE closed green all 4 days last week. So you know how we're talking about reading the tape this week? Well, that's what happened last week, and it was something to pay attention to. Buyers came in from the open to the close all 4 days last week and showed follow through. And we're actually seeing follow through right now, 56.54, where it's opening up higher from Friday's close as well. Now, closing the gap around 57 would probably be the first level. However, because the XLE, the energy ETF, was strong and closed above that, now we need to be prepared for if that follows through this week. Again, reading the tape, shorter time frame, we need to have a list of stocks ready before the market opens if this buying pressure continues. So now I'm going to give you the list of 4 stocks I'm going to watch here. All of them might not have perfect order flow, but remember, the longer term order flow is kind of not the main focus right now. And I know that kind of sounds strange because, the order flow, stacking the order flow is pillar number 1, right? But this is what professional traders do. You adjust your expectations, you adjust your risk reward, especially your reward potential in this kind of environment, and you adjust your position size. But now we're taking that a step further, and now we're going to be looking at this sector and these individual stocks, which are the highest weighted stocks in this select ETF. So if you don't have this already, I'm going to give you this link. I'm going to post this here in the chat. So if you want, you can click on that. We're going to look at the top ones over here in the XLE. We're going to look at Exxon, CVX. Let me actually make that a little bit bigger for you. CVX, EOG, and COP. So let's keep it. Let's take a look at those and have them in a watch list heading into this week. So again, you can see very similar here. Exxon, CVX, Chevron, EOG, and COP. All right, so those are the 4 that are going to be on my watch list, on top of watching the XLE and what I need to see the XLE do this week. So we're going to be watching, very similar to what we just said before, the XLE, and we're going to be needing, wherever it opens up, and let's just put there for a second, we're going to need to see price open and stay above there. If it does, that's where we're going to dive into and have that list ready. Now, I can't stress this strongly enough, okay? And we get this question quite a bit, especially here on social media if you happen to not be in the boot camp with us. This is the game plan. Remember, the entire process of elevating your thinking and moving from chart reader to trader is you need to build, if this happens, then I plan to do this. The part that gets missed quite a bit here on social media is that if we are looking at something to happen and it does not happen, then we're not in the trade. And I really need you to understand that, because it's a deeper level of thinking. It's a higher level of thinking. And quite honestly, It's how professional traders think. So I really want to inspire you to think like a professional, but more importantly, take a second before you type into the comments that, hey, you said that stock was going up on Monday and it went down and you lost money. You don't know what you're talking about. Remember what we said. If certain things happen, then we plan to trade them. So if the XLE and all those 4 stocks I just mentioned, or those 4 stocks that we just mentioned that have bearish order flow that are known as, the stay-at-home stocks during this crisis, if they rally, we will play them on a short-term basis. If those other, based on how we just outlined it, if these stocks and the XLF rally and give us entry signals and hold the bid, we will trade them. However, if these stocks open lower and continue to go lower and trade below Monday's opening price, we're not even in the trade. So I really need you to elevate your thought process so much deeper than, hey, I read an article, or I saw something on StockTwits, or I saw something on Reddit. That's not thinking deep enough. I'm going to challenge you. Again, whether you're in the boot camp or not, if you want to learn about it, click down below. But I'm going to challenge you. I am not going to allow you to be lazy. That's why you're here, and I congratulate you at 7:30 in the morning. You're learning, you're asking questions, and you want to raise your game, especially heading now into the end of the year, into next year. Raise your game by coming up with as many pieces of the argument that you could think of. And I want to buy it because of this, and I want to buy it because of this, and I want to buy it because of this, and I want to buy it because of this. That's how professional traders run their business. And you need to take it a step further. Are you buying stocks that have longer term order flow, and today's order flow is still valid, and this week's order flow is still valid? Great. If you are, your initial position size can be a little bit higher. If, like we talked about in Wayfair, Etsy, Peloton, and Zoom, they have longer term order flow. So let's just go to Peloton as an example. We'll look at Peloton and we'll look at Zoom. These stocks have bearish order flow, but a short-term catalyst, very similar to when earnings comes out. So if we're looking at these right now, and we can acknowledge that the bigger picture is still to the downside, there's bearish selling order flow, there's supply on the market, but a short-term catalyst that could have us looking to buy these stocks today. If that catalyst unfolds, where buying steps in, then we look to initiate a first position. Now, here's a monster part of what many newer traders just don't take that extra step, and I'm going to show you how to do that now. If you're trading a stock that has a short-term catalyst against longer-term bearish order flow, that means the smart play is your initial buying of that stock needs to be on less share size, because as I said at the beginning of today's call, we're looking for follow-through. So the first piece we're looking for is stay above the opening price. The second piece we're looking for, close strong. The third piece we're looking for is tomorrow we have well bid, which means higher highs, higher lows, close near the highs. This is what is going to separate you and give you absolute, positive, unshakable conviction in your trading, because it is now 7:50 in the morning, well before the market opens. Let's just say 90 minutes before the market opens, 100 minutes before the market opens. We are scripting out what we plan and need to happen this week before the market opens on Monday. So now we know what we need to see on Monday. Now we need to see on Tuesday. So you start to work your picture from the market, and let's define the market, the SPY, the NASDAQ, and the Dow. That's how we're looking in the market, the weekly opening price, and then Monday to Tuesday to Wednesday to Thursday. If those things unfold, great. Get in there with confidence. If it starts to move in your favor, you look for a possible place to add to those trades. If you look to add to those trades and they hit your initial profit target, then you have to shift over from profit target to now trend trading, because you're getting follow through, and now you use what we call in the boot camp the profit maximizer. This is where trading becomes simple. And I know I keep using that word over and over again, and I get people, trading is not simple. Yes, it is. Trading is simple if you do what we're talking about. Monday, I need to stay above Monday's opening price. Tuesday unfolds. Did Monday close strong and close above the opening price? Great. Simple. How do you know that? The weekly chart is green. That's the first step. Is the weekly candlestick green? If it is, then you go into the daily candlestick. So as long as we're here on the weekly chart and it's green, now you go to the daily chart. What are you looking for on the daily chart? I just told you, here's Monday's candle. Here's Tuesday's candle. You want it to be well bid. Higher highs, higher lows, and closing near the high. Now you're going to do that from Monday to Tuesday to Wednesday to Thursday to Friday. As long as that unfolds, you only need then to make a decision. What does your trailing stop loss look like as it moves in your favor? If Zoom, Peloton, Wayfair, Etsy continue to push down and they're trading below the opening price, you leave them alone. The catalyst was not strong enough for new buyers to come back in. You leave them alone. So what do you do from there? Then every single day, again, as I give you every day, this is where you start to look at sector rotation. If the reason those stocks are strong start to fade away, now we're going to spot, it's over here, we're going to spot some opportunities as smart money rotates in and out of sectors like we normally do. So this week, the week of November 29th, it's a little bit of a different picture because we are broken with one gigantic news story. Everybody do me a favor, just type in yes if you understand the process that I just explained to you. Again, there's a lot more behind stacking the order flow, but I just want to give you structure heading into this week because we're shifting from order flow to tape reading, and I just gave you the process of understanding what you need to look at before the week even started. Look at those weekly candlesticks and determine if they're green or if they're red. And that's going to tell you if this happens, then I plan to do this. Very, very important to have that scripted out beforehand. You know, what's actually kind of cool too is I get a lot of questions about whether we're talking about day trading or swing trading. I want to make this super clear, super clear. Everything that we talk about here is swing trading first. I can't stress that strongly enough. And here's the thought process behind that. If I don't like it as a swing trade, the odds of me not wanting it as a day trade are pretty good. So if I like it as a swing trade, I'll consider it as a day trade. But everything that we're looking at here first needs to have an obvious reason for me to determine, do I want to then go in and look for a buying opportunity? Now I know, which is kind of interesting, we got a lot of people who messaged me over the weekend, both here on social media in the comments and other places, telling me that they bought the dip on Friday afternoon, knowing that the market was going to bounce back. First of all, nobody knew that the market was going to bounce back today. And quite frankly, now we're looking to determine if today's buying is short covering versus fresh buying. So here's a day trading clue. Remember, we just talked about short covering, a short covering rally versus versus fresh buying. Short covering rally is typically fast and then melts back down because new buyers, remember, we always talk about the push and the pause. So what you're looking for if you're a day trader this week, and quite frankly, if you're a swing trader as well, but I'm going to give you both examples. If you're as a day trader this week, the push that we're looking to get off of the close from Friday, we need a push and a pause on the 5-minute, the 15-minute chart. You want to take it even more simple? After 30 minutes of the market being open, we need to still be near the high of the day, 30 minutes. From a swing trading perspective, we need the end of the day to close green and close in the top 10%. So now, again, we're scripting out 90 minutes before the market opens, 7 hours before the market closes today, what we need to see to have unshakable confidence in our decision-making ability. So it doesn't matter if you're day trading or swing trading, that's what we want to see. We get a lot of questions about what it means to have a short covering rally. So I just want to touch on that for a second because it's a really important distinction to understand. Short covering usually happens in two instances. You have bearish order flow where short sellers are selling the stock on the way down. In order for short sellers to get out, they have to buy that stock back. So if you short it, you buy it back. When you buy a short back, that means you covered the stock. But really what it comes down to is you're buying. But what happens is when it starts to go down and stops going down, if I am a short seller and I want to get out, I got to get out really quickly. So now I'm pushing it up quickly. Well, everybody else who shorted it is now buying it back quickly. And smart buyers, let's use Rachel as an example. Let's say Rachel notices this and all of a sudden it's going down and stops. And you have this fast spike. So that's the short covering people getting out. So I'm wrong. Rachel notices that she's not in a trade yet. She goes in, it's like, wow, this thing is going up pretty quick. I'm going to be a new buyer. And now you got short covering buying. You have new buyers buying, and you get a nice fast push to the upside. Now, here's the next thing. How do you know when to add? How does Rachel know when to hold onto that trade? And it really comes down to one thing. If we push up on that shorter time frame and go sideways, the longer we go sideways, that means there's new bids underneath that. So short covering means they're getting out of the trade. Pushing up, pausing, and staying there means there's new order flow, new buyers underneath there, and that's where you could lean into your second position. So that's how you understand the difference between fresh buying and a short covering rally. Short covering rallies typically go straight up and straight down. You know that as a V top or a V bottom, actually. The other kind of short covering rally is one that I think that we all know, which if we take a look at this stock is probably the granddaddy right now of all short covering based on short float. So stocks like GME and the whole Reddit crowd, when they start to get bought and people buy these stocks, GME and AMC and those stocks, even BYND a little bit earlier in the year, that is based on the fact that there's a really big short float in that stock. And buyers target stocks where people have to get out if they bet on it going down and it starts to go up. So there's a short covering rally after it goes a prolonged move to the downside and buyers step back in. And there's a stock that may not even have a bearish order flow, but has a high short float. And that's another one that catches a big move. So you want to write that down. Two different types of short covering rallies. Short sellers need to get out of a trade after a downtrend, and a stock that might not have any order flow at all, but has a high short float like we saw here in GME, AMC, and actually I'll show you on the daily chart. BYND actually got caught up in that this year as well, right over here. This was a pretty big one right here when it went from 100 to 150 basically in 4 or 5 days. But what's interesting here is you can see that the short float did not support new buying after that, and it just melted back down to the downside. Now over here, it did look like it, but it didn't follow through. From 1 week to the next, it didn't follow through. So we covered a lot of stuff today. The big thing I want to talk about right now, first, I would if you're like me, you love to learn. Again, the big mission is to be better tomorrow than you were today. That's the big thing. Oh, by the way, if you could please do me a favor, if we're providing you value on these calls, please do me a favor, smash that like button and hit subscribe. It would mean a lot to me. It would also tell me that you really like this kind of content. So what I'd suggest to do, that fast forward to that section we just talked about short covering, because when you start to see it on charts, it's absolutely amazing, because now you're like, you didn't get me. I'm not shorting that thing. I know exactly what you're doing. And you now look for the push and see if there's a pause. If it goes up and pauses after that fast spike to the upside, you know that you can start to dip your toes in on a smaller piece because you're fighting that longer term order flow, especially if there's order flow. I want to give you one other area as well. We've been watching one other sector, but first I want to get into Bitcoin and Bitcoin related stuff because quite a few members of our community are in the Bitcoin world. 60,000 has been the level. So I want to walk you through now the same tape reading exercise that we just did in the market and what we're looking for this week. Let's do the same thing on Bitcoin and kind of really set ourselves up to understand what we need to see in Bitcoin this week. Because again, I got a bunch of people typing in, I bought the dip last week because I know it's going up. You're full of beans. I don't know. You don't know. Jim Cramer doesn't know. Nobody knows how things are going to react this week after the news from last Friday. We are now waiting for the market to open to see if buyers step back in or if they stay away. So we put this into the Bitcoin equation. Bitcoin last week, actually, let's do 2 weeks of Bitcoin. After it made new all-time highs, there's the opening price. Let me actually move this out a little bit so you can see it better. This right here is the opening price 2 weeks ago. This here is the opening price here. So right now we're looking at that is the week of the 22nd, which was last week. Now we're waiting to see it open here. Depending on where it opens, and you can see right now it's at 54. Let's just say it's right there. Just for argument's sake, let's say it's right there. Getting a lot of people talking about buying Mara, Riot, BT, and HUT. You know that if you're a regular viewer of this channel, those are the ones that we watch in sync with Bitcoin. If Bitcoin continues to trade below the opening price, last week's close and this week's opening price, there's no reason to get in there and start buying it. You're basically just guessing. There's no reason to guess. Let Bitcoin do exactly what we just talked about, which is if it holds the bid on Monday and you're fighting the last 2 weeks of buying pressure, that means that the initial entry should be lower than your normal entry until you get feedback. And what kind of feedback are we looking at? We're looking at this. We want to see the next 2 candles be green and well bid. That's what we're looking for. Now, this week could technically go well bid. We might end up getting a candle that looks like that. Let me just bring this in here. We might get a candle on the weekly chart that looks like that, where we have higher highs and higher lows, and if it closes green. So if that steps in immediately, then you start to work your positions in BTBT, HUT, Mara, specifically the one that I think I like trading the most, and Riot. I want to work our way over into one other sector that was showing relative strength last week, and we're not really seeing it here on the sector rotation because they're all red, but basic materials have been something that I've been paying attention to, and I'm going to go over to the daily chart and give you an idea of 3 of them that I'm going to keep an eye on. Now, again, and I can't stress this enough, I'm giving you ideas that are going into my game plan for this week. If they follow through, I plan to trade them. If they don't follow through, then I stack the order flow from 1 hour to the next, from one day to the next. And if this happens, then I plan to do this. So as of right now, 90 minutes before the market opens, I'm going to be looking at basic material stocks. So remember, I just gave you this link. I'm actually going to give you the heads up on this as well. Let me zoom this out a little bit for you. You click on the homepage over here, and now we're talking about the XLB, which is home building stocks, basic material stocks. I'm going to give you this. I'm going to put this in the link here for you. All right. And from that list, which we have over here, okay, you go into portfolio. And then within portfolio, you're going to see the largest holdings of the XLB in this list. But we're going to take it a little bit different step. We're going to take a look at some of them that have had decent buying pressure recently. Alcoa is one. I have an alert set for 52. So big reversal, close near the highs, relative strength to the market. Now, I get this question all the time, and it's a super cool one. If the market got hammered the day before, which it did last Friday, what would be the quickest way to find interesting ideas that make sense the next day? So now we're talking about Friday to Monday. Well, the market closed on the lows. What should be the first scan that you run after the market closes? Which stocks closed near the high? Which stocks closed well above their low? Which stocks closed near the top of the range? Alcoa, despite the fact that it's in this trading range, closed near the high, which immediately says this stock had relative strength to the market on Friday. And it's interesting. So interesting to me and members of our community means now we put that in the game plan. And when we set the software up to stack the order flow from hour to hour, day to day, week to week, and month to month, if the buyers that were in Alcoa on Friday come back in, that's now going to float to the top of my watch list. So from the XLB, basic materials, I'm going to look at Alcoa. I'm going to look at NUE, Nucor, which you can see again, relative strength. And we actually have a nice little bullish trend here, holding that bid so far. And the last one is LAC. LAC is another one. You can see a really good, clean bull flag here in LAC. I'll just move that one out for you a little bit. So we covered a ton of stuff today. First, I want to thank you so much. I'm happy to be back. I had a little bit of a quick trip to New York last week to visit my parents. So we talked about, to recap everything, we talked about stocks that could positively be affected over the next week or two if the new variant continues to be a headline. Those stocks are Etsy, Wayfair, Zoom, and Peloton. I also told you how to read the tape in those stocks from today through the week, through the next 2 weeks. So we're actually scripting out the next 2 weeks in those stocks. We also covered how to tape read the market this week from Monday's opening price and what that means going forward. Then we talked about an individual group of stocks, an industry that showed relative strength last week, the XLE, the Energy Select ETF, because it closed green all 4 days last week, and especially on the day Friday where the market got hit really hard. So from the XLE, then we went into 4 other stocks, which is CVX, Exxon, EOG, and COP. And then we just finished up with Bitcoin related stocks and how to read the tape in Bitcoin this week. And we just broke it down into XLB basic material stocks to put together. Now, here's the big thing, and this is the separation from really being in control of what you do from just chasing alerts. Those are all the stocks that are initially going to go into the watch list that you could consider looking at this week. After the market opens, don't forget that second part, which is if this happens, then I plan to do this. If this never happens, you don't do this. That's where smart traders get in trouble. They don't have a plan, and if they do, they don't follow it. So I'm going to challenge you right now and come back to visit me tomorrow at the same time, and we'll map out how everything unfolded from day to day and quite frankly, hour to hour, and whether or not we should have taken action and the type of action we should have taken. That's what's going to separate you from frustrated chart reader who knows everything about chart reading to feeling like you're a trader and watching your account grow with predictability. It's because you finally understand what you're looking at, but more importantly, how to use it and when to use it. I have to head out and head into our other game plan meeting. Have a great day, everybody. I'll speak to you soon. Please do me a favor, smash that like button and make sure you come back. Watch that video one more time. We actually spent a lot of time on short covering rallies. Some pretty interesting stuff there. Have a great day, everybody. I really appreciate you.